You deposit your paycheck into a checking account. You earn maybe 0.01% interest. Meanwhile, the bank is using your money to make billions. How does that work? In the next 7 minutes, I'll break down the 3 main ways banks make money and reveal the hidden system that most people never see. First, let's start with the most obvious way banks make money: interest on loans. When you deposit money into a savings account, the bank doesn't just hold it in a vault. They lend it out to other customers for mortgages, car loans, credit cards, and business loans. The bank charges borrowers a higher interest rate than they pay you. That difference is called the spread. For example, if the bank pays you 1% on your savings and charges 5% on a mortgage, they keep the 4% difference. Multiply that by millions of customers, and you're talking about billions in profit. But it's not just the spread. There's a deeper system called fractional reserve banking. This is where things get really interesting. When you deposit $100, the bank doesn't have to keep all $100 in reserve. In the US, the Federal Reserve requires banks to hold only a small percentage, often 10% or less of their deposits as cash. That means if you deposit $100, the bank can lend out $90. That $90 gets deposited somewhere else, and that bank can lend out $81, and so on. Through this multiplier effect, your $100 deposit can create up to $1,000 in new money. Banks profit on every single loan in that chain. That's the fractional reserve system. The second way banks make money is through fees. This is where they get you on the small stuff: overdraft fees, ATM fees, monthly maintenance fees, and insufficient funds fees. These add up to tens of billions of dollars each year. For example, Americans paid over $30 billion in overdraft fees in a single year. That's money that comes directly from your checking account, often for mistakes as small as a $5 charge. Banks also charge merchants a fee every time you swipe your card. It's called the interchange fee, usually around 2% to 3% of the purchase amount. You don't see it, but it's built into the price of everything you buy. That fee is a huge profit center for banks. The third way banks make money is through investment income. They take your deposits and invest them in government bonds, corporate bonds, and other securities. Because they manage billions in deposits, even a small return generates massive profits. This is also known as the float, the money they hold before they have to pay it out. They invest it in the meantime and keep the returns. And then there's the hidden system, the Federal Reserve. Banks can borrow money from the Fed at a low interest rate and lend it out at a higher rate. This is called the discount window. It's a way for banks to access cheap money and lend it out for profit. Banks also earn interest on the reserves they hold at the Fed. That's a relatively new development since the 2008 financial crisis. It's now a significant source of income for many banks. Now, what does all this mean for you? First, if you're earning 0.01% on your savings, you're losing money to inflation. The bank is using your deposits to earn 5% or more, and they're giving you almost nothing. That's why it's important to shop around for better savings rates at online banks and credit unions. Second, you can avoid many fees by maintaining minimum balances and opting out of overdraft protection. Third, and most importantly, be aware of the system. Banks are businesses. They're not charities. They're designed to maximize profit from your money. The more you understand how they operate, the better you can protect your own finances. To summarize, banks make money through interest spreads, fractional reserve lending, fees, investment income, and borrowing from the Federal Reserve. Most people don't realize they're participating in a system that generates billions in profit. Once you understand how it works, you can make smarter choices about where to keep your money, how to avoid fees, and how to earn better returns. Thank you for watching. Subscribe for more practical home finance guides.